Great. All right. Thank you for joining our webinar today that's brought to you by the Tollway Technical Assistance Program administered by Inner City Underwriting Agency. Our firm has been fortunate to have worked with the Tollway for the past 2.5 years to provide assistance to diverse construction companies in the Chicagoland area to help them grow capacity and increase employment opportunities in our communities. When the Tollway Technical Assistance Program was originally conceived, no one could have imagined what we're going through now. It's so fortunate that this program exists, and we have we and many other tollway technical assistance firms are able to provide assistance and valuable information to construction firms throughout the region. While this program is primarily intended for construction companies enrolled in the Tollway Technical Assistance Program, we've extended invitations far and wide because we believe the information you will learn today is so important. We're fortunate that Ms. Christyn Freeman will be conducting our webinar, and we're confident you will learn and acquire a lot of information on this subject. Thank you again, and I will turn it over to Ms. Diana Hennington to do the introduction of our guest speaker today. Thank you.
Okay, thank you, Matt. And I would like to take this time to thank Matt and Elise for putting together this timely and much needed workshop to help our businesses and with financial support information. It's my pleasure to introduce Ms. Christyn Freeman, who has joined the Inner City Tollway Technical Assistance Team as a consultant on business finance. She is founder and chief solutionist of Project Forward. She has been an economic and community development practitioner for over 10 years. Ms. Freeman is passionate about building Black business and communities through access to capital and real estate development. She serves on a number of committees, commissions, and councils, and is sought out as an expert by regional financial institutions and business development organizations, such as the Chicago Community Loan Fund, List Chicago, Chicago Urban League, City of Chicago Department of Transportation, Department of Planning and Development, and Project REAP. To date, she has provided, and this is really impactful, building and technical assistance for 800 small businesses and organizational clients, securing over 22 million in city, county, and state grants and incentives in 6 years, and leveraging over 115 million in additional investments. So it is my pleasure today to introduce Ms. Christyn Freeman.
Thank you, Diana. Thank you very much for that introduction. So I really want to take some time just to say thank you for allowing me to make this presentation. This information around the Paycheck or Payroll Protection Program is rapidly changing. So I do want to say thank you to the contractors that are participating. Just making an investment in yourself is really extremely important, especially around this time, and being able to respond to something like COVID, as well as everything else that's happening in regards to your small business. Yes, so Diana covered a really good introduction of myself and my company. So Project Forward, we have been working with small businesses in underserved communities as well as organizations. We do this in a variety of ways in providing guidance to small businesses, property owners, and many times the organizations that will contract me to do services are organizations that are working with a large number of businesses. So many times the client might be an institution like a lender, or in the case of this particular project, working with a group of contractors. So the work that Project Forward has been really able to do is impacting community in a variety of ways. And right now we've really been focused on a number of the SBA products and supporting businesses with access to capital opportunities, both from a federal perspective as well as a local municipal perspective. So things like the Neighborhood Opportunity Fund, the Small Business Improvement Fund, Retail Thrive Zone, things that are really identified within the city of Chicago and in some cases Cook County as well. And so just going over a really quick overview of select projects that we've had the opportunity to participate in, the Paycheck or Payroll Protection Program pop-up call center. So Chicago Community Loan Fund identified a need to be able to provide some additional technical assistance to local area nonprofits as well as small business organizations within the Paycheck Protection Program application process. Additionally, we've recently worked on a Chicagoland COVID-19 Community Resource Development Guide, and you should have received a link to that guide within the invitation. And the reason I am really harping on utilization of that is we are updating it at this point every 7 to 10 days. And so with a lot of the information that is coming out fairly frequently from both the city, the county, the state, it is really important as a small business owner to be on top of as much money and opportunity and forgiveness that may be available so that you are able to leverage the resources that are being released and pushed out into the community. I just know that it can get a little noisy in trying to figure out what's a grant, what's a loan, what's an incentive, what's available privately. And so the Chicagoland COVID-19 Community Resource Development Guide has been trying to stay abreast of all of those incentives. So we will be releasing another edition of that within the next week. And then there are just additional opportunities that Project Forward will participate in to highlight area businesses such as Small Business Saturday and focusing on doing pop-up retail within commercial corridors. So as we go into today's program, I just want to again say that this is it is not a straightforward process. So if you feel confused at the time, it is not your fault. And so I really want to try to go over some things in regards to the purpose and eligible uses of PPP. That really hasn't changed over this process, but I do want to make sure that you are fully aware and have a clear understanding of why PPP was created, as well as what the eligible uses of the funds are. Also, how to maintain safe harbor protections. And so what that means is within the program, there are some considerations that will protect you to allow you to be able to make sure that you are able to maximize your forgiveness. So in understanding what those safe harbor protections look like, you need to understand how to protect and maintain that protection for forgiveness. There is now 2 versions of the Paycheck Protection Forgiveness application. There is an easy form and then there's a regular form. But both of these forms, the easy form is new. The regular form has been modified from the last release. So depending on when you actually may have heard the first time about the loan forgiveness application, there has been changes to that. Additionally, there is going to be a call to action within this conversation. And so because this is a political consideration, I do want you to be aware that you do have an opportunity to make your voice heard in regards to giving some feedback or insight about how you think the program could and should work in the future. Then we will move into a Q&A, and then we will close out the presentation. So I have made a note and welcome you within the live Q&A. So I will do my best to try to monitor the chat, but there will be a session or an opportunity at the end of today's session to go over any questions we have not had the opportunity to discuss or that I have not had the opportunity to address within the chat. So again, I want to reiterate, please do not feel bad if you are not abreast of everything that is happening with this program. There have been changes in rulings that have been released in some cases days apart. So we've had updates April 3rd, April 14th, April 24th, the 28th, the 30th, May 5th, May 8th, May 18th, I'm sorry, May 13th, 14th, 18th, and 20th. And so what that means is this program is dynamic. It is not a static. It's not static. So there will be rules, regulations, feedback, updates that frequently are being released. And so even as it stands now, there are additional commentary that may come out after today's date in regards to the PPP program. And so please do stay abreast. Please do keep in touch with the organization so that you are aware of what those changes may be and how they may particularly impact you. And so in really quickly going over the Paycheck or Payroll Protection Program, it is really tied to COVID-19. So it is intended to provide economic relief to small businesses nationwide that have been impacted by the coronavirus in 2019. And so what that means is, in some cases, people are saying, well, I heard I can get this money to do other things. It really is tied to you saying that your business has been negatively impacted by COVID-19, as well as the fact that you may not have additional resources to survive that storm. And so what that ties into in a larger scheme of consideration is you may have heard about organizations taking PPP that did not necessarily need PPP. Excuse me, I do have to plug in. I'm going to continue to talk though. They did not need to take PPP. So you may have heard of the Lakers and a lot of larger institutions that did get PPP, and you say, well, they weren't a small business or they did not need the money, and that is true. And so some of the regulations that recently came out were to assist in addressing and preventing some of those things from actually continuing to occur. Next slide, Matt. So going into the use of the loan, because it is a Paycheck Protection Program or Payroll Protection Program, really it's the emphasis on protecting your employees, being able to maintain the level of staff that you had prior to COVID hitting. So one of the changes that have come out in recent regulations is it has decreased from having to use it for 75% of payroll expenses. So now you only need to use it for 60 or at least 60% for payroll. And so what that means is you now have up to 40% for non-payroll uses of the loan. And what that really means is if you want to get your loan forgiven, because there is a consideration, you might have run the numbers and said, look, I might have to use this in a different way. I may have to use more on non-payroll expenses. And so if that is the decision that you are making, understand that that will decrease your ability to have the loan forgiven. As long as you maintain the 60-40, as well as for eligible expenses, you will be able to maintain the highest level of loan forgiveness. And so when we talk about non-payroll expenses, it is rent, it is mortgage interest, not your whole mortgage payment. So if you own a property, Matt, can you go back to the other slide? If you own a property, you cannot include your complete mortgage payment in that. But you also can include utilities. And so again, people will say, well, I have more expenses. I don't have that much payroll. To be honest, PPP was not created for really small businesses. And that is a challenge of the program. It is not perfect. And so I do want to take an opportunity to highlight the EIDL loan, which is currently available. It has reopened up. It is directly from the SBA, the Economic Injury Disaster Loan. And that is what you may have heard about in regards to the $10,000 advance. And so I know today we are really focused on PPP, but I do want to touch on EIDL very quickly. EIDL will likely be able to be used in conjunction with PPP. And so if you have not applied for EIDL yet, I recommend that you do so. I will include the link in the live Q&A chat so that you can just click on it, but take a look at the application. It is very straightforward. Do understand that there is a difference with the advance. So you would be able to potentially get an advance, and that is based upon your employee count, like your W-2 employee count. It's $1,000 per employee up to $10,000 as far as the advance goes. Then they will process your loan application, let you know if you have been approved or denied, but you do have the ability to keep the advance, and the advance is forgiven as the form of a grant. Next slide. So as I mentioned, because this loan is forgivable, and they're basing the forgiveness upon you maintaining your full-time employee count, both the counts and the salary. So those are the two main things that go into the loan forgiveness calculation. So if you are looking back at your full-time equivalent, did your salaries or wages decrease, or did your actual employee count decrease? One of the biggest changes is you now have the opportunity to get those employee counts back up to levels that they were prior to COVID by December 31st. That actually used to be, today was the previous deadline. So one of the changes has been to increase the amount of time that is allowed for an applicant or a borrower to meet that safe harbor and protect their ability to have the loan forgiven. So you have until the end of this year to actually get those numbers for both the wages and the employee counts back up to what they were prior to COVID. So if you do that, you have the opportunity to maintain 100% forgiveness. So just a really quick way in how you need to do that, especially with small businesses, we have a tendency to have a lot of conversations, a word of mouth. In some cases, it's not adequately documented. We may have sent a text message or an email. This particular slide outlines very specific 5 things you need to do to meet the conditions as identified by the SBA to avoid them saying you have not met compliance for safe harbor protection. So again, if you have had to decrease your employee count and you want to resume those employee counts, what they won't do is penalize you if your employees will not return. So right now, at least in the state of Illinois, it is currently more advantageous for some people to be on unemployment than it is for them to return to work. And if you are finding that is the case with your employees, this is the process that you need to do to show you have made a good faith effort to resume what your employee numbers were prior to COVID. And then in the event that you cannot meet what those numbers were, you will not be penalized. But this is the process that you need to follow in order to show that you did make that good faith effort. So meaning you need to put this offer in writing to either rehire the worker or restore their hours, depending on what the situation is. Again, you secondarily must need to offer the same salary or wages and the same number of hours or more prior to laying the worker off. And so if you cannot do that, then you're not meeting the requirement. Third, then the offer must have been rejected by the worker. So ideally, if you're sending a written notice, you would receive a response in writing. In the event that you don't receive the response in writing, if it was a verbal response, you need to document as much as possible. If it was a conversation that occurred, take down the time that the conversation happened, as well as identifying a deadline in which the person needs to respond to you. Fourth, maintain these records. So when you're doing the documentation for the offer as well as the rejection, you need to maintain the records. The SBA has the ability to audit these things 7 years after the loan. So this is something that you will need to keep on file for a while. And this final piece may vary from state to state, but notifying the unemployment office within 30 days that you did in fact make this person an offer and they have refused to accept the offer, therefore refusing, turning down the right to work. So as I previously mentioned, there are 2 versions now of the PPP forgiveness application. Next slide. So depending on your organization, so if you are an entrepreneur that essentially is the only paid employee of your organization, so meaning you are either a sole proprietor, an independent contractor, even if you are an LLC, but you don't have any other staff, this would apply to you. You would be able to do the easy application. So again, if you are not counting any other employees and you only put 1 on that application when it said how many employees do you have and you are only counting yourself, you are eligible then to apply for the easy application, which is literally only 3 pages long. Option number 2 for the application You, as the company, did not reduce annual salary by more than 25%, so either salary or wages, and you did not reduce the number of employees or reduce the actual hours during your covered period. And so if you meet these two requirements, you are eligible to apply using the EZ form. The final option is if, again, you didn't reduce the annual salary by more than 25%, or, well, I should say, and you were not able to actually operate. And this is more so due to restaurants and event spaces, and in some cases, contractors, depending on where you're working, because some other entity said you cannot function. Some other entity, be it Secretary of State, CDC, any other government entity that has said your industry has to shut down right now, and you did not reduce the annual salary or wages by more than 25%, you too can do the EZ application. And so within this particular, I want to make sure that I have been able to showcase both the full form as well as the EZ form. So the first slide will be the regular form, and then I will show what the EZ form looks like. So for this one, this is the long form. Please take note that your lender may either accept the paper application or they may have their own electronic form. And this process is going to vary lender to lender, so I can't give you information on who's doing paper and who's doing electronic. So please do reach out to your lender to find out. But in regards to filling out the basic information, your business legal entity, the address, your social or your EIN, depending on what you're using. But when you getting down into the application section, there are two loan numbers. You have your SBA PPP loan number, which is issued by the SBA, but then you also have whatever is issued by the lender. Those numbers may or may not be the same. And again, that is going to vary depending upon your lender. Your PPP loan amount, all of that information, as well as the disbursement date, will be within your documentation of your paperwork. The reason your loan disbursement date is so important is because that is what is used to calculate your covered period, as well as potentially your alternative payroll period, which we will get into both of those as well. In the event that you did get EIDL or the EIDL advance, you do need to indicate that on the application. Identify what your payroll schedule is. And again, we will discuss covered period as well as the alternative payroll covered period. But that is really going to be up to you. You are going to have to determine as a business owner which one puts your business in the best position. We'll get into that in a few more slides. Next slide, Matt. This is the forgiveness, the EZ forgiveness application, and I've screenshotted the whole form here. This is mainly what you need to fill out for page 1. Page 2 is some certifications, and page 3 is an optional demographics page. So this is literally, if you have no other employees, it should not take you an extremely long period of time to do these applications. The biggest thing it is going to take is making sure you have the appropriate information for your payroll. And so, again, understanding your covered period versus your alternative payroll covered period is likely going to be what takes you the longest period of time in doing the applications, running the numbers in both scenarios and seeing which one is best suited for you. So, as mentioned, one of the changes for this particular portion of the program is the change in the coverage period. So, there has been the extension of the covered period, meaning you can take a look at expenses that were incurred not just through June 30th, but now through the end of the year. So, the covered period applies to the general program and not the covered period for forgiveness. So meaning you need to identify what your expenses are during this period of time. And please do note that if you got your loan prior to June 5th, you have the option to also either, you can use the 8-week original covered period, instead of the new 24-week covered period. So it just depends, again, on what's the best scenario for you. So want to highlight that there is a difference in the covered period salaries. So for those that are sole proprietors, this is really for you and what you need to take note of. There is an upper limit on what will be allowable for forgiveness within the payroll consideration if you are self-employed. So if you're looking at the 8-week covered period, that is capped at $15,385. Now for the 24-week covered period, that is going to depend upon if you're doing the EZ application or if you're doing the regular full-length 5-page application. So there are 2 separate upward limit caps on those that are self-employees or self-employed or owner employees. And again, there is some consideration. There's a difference between the EZ and the regular form. So please do take note. If you're using 8 weeks, if you're using 24 weeks, there are some modifications within what is allowable for that forgiveness consideration. So the difference between the covered period and the alternative payroll covered period has more to do with how you and your organization are doing payroll. It may be better for you. Your covered period traditionally is either the 8 weeks or 24 weeks, but it starts on the first day of disbursement of your loan. And so when you're looking at what your expenses are during either this 8-week or this 24-week, that is when you would pick if it makes sense for you to utilize your covered period or if it makes sense for you to utilize this alternative payroll covered period. And so you may have one period for all of the expenses that you're looking at, and then the alternative payroll covered period only for your payroll. So if you do change what that covered period is on the basis of how you're running payroll, that does not apply to your expenses. So you can have the alternative covered period be one set of dates and not completely line up with your overall covered period, but you're only using that alternative payroll period for your payroll expenses. It will not be the same period of time for your non-payroll. So if you're looking at your rent and you're looking at utilities and you're looking at mortgage interest, it's not going to be the same date for the alternative payroll period if you choose to use that as your date for payroll. You would still stick with your traditional covered period for those non-payroll expenses. Next slide. So this form is for, again, the long form. And so this is the reason this is still the long form is because you actually do now have to calculate what the forgiveness amount would be. And so there is an additional form in the long form called Schedule A. There is no Schedule A in the easy form. And so as we, again, talk about what these non-payroll costs are, they have had to been in place prior to 2/15/2020, meaning the SBA is not going to allow you to take on new expenses to utilize the funds and spend them down. These should have already been agreements, contracts, leases, services that you had already had in place prior to COVID-19. Again, 60% of the requested forgiveness amount must be your payroll cost in order to have 100% of your loan forgiven. Within this line 11 is the forgiveness amount, so you can actually see once you enter in all of this, if your loan is going to be forgiven by 100%, then line 11 is going to be what that amount was. And it depends on how complex some of the information, depending on how many employees you have. There are some online calculators. And even if you use like a third-party tool, so if you're using a QuickBooks or an ADP or Paycheck, most of those online third-party tools do have a PPP report that you can run. And so I am strongly recommending, especially for those organizations that have multiple employees, if you are not using a third-party service, this may be one thing that would make it much easier. You push a button and literally send it to the lender, and it will help you calculate this information as well. So if you don't have that in place, I strongly recommend that you do. And if you do currently use it, take a look and see what your PPP report looks like so that you know that you are adequately entering the information appropriately to generate the report the way it needs to look. Next slide. So as we look at this same forgiveness calculation for the easy form, again, there is no Schedule A to complete. The Schedule A is really what goes into breaking down who your employees are, and we'll go into that. You'll see it a little later on, but that's the reason there is no Schedule A, because you don't have those details to enter. It's still primarily going to break down into what were your payroll costs, what's the business mortgage interest, what are your rent or your leases, and then the utilities. So again, when you are making the non-payroll consideration costs, it is not your complete mortgage, it is only the interest. And I do also want to highlight you cannot prepay. So some people have asked in the past, can I prepay my rent? Can I prepay my mortgage? Can I prepay these things? No, it really needs to be for the period of what your coverage date was. You can't prepay outside of what that coverage date is. So I did mention this, but I do want to reiterate, there is some additional guidance that is pending. And so I am waiting to see what some additional information is going to come out in regards to some specific questions. And so when some of these things are written, they don't necessarily completely write them out totally. So you've got CPAs that may ask for additional information. And so some of those things will also be released down the line. But there is the concern around pending guidance waiting on incurred versus paid non-payroll costs. So one thing, as I mentioned, you can't prepay, but you can, there is the difference between when you actually pay it versus when the expense was incurred. And so they do want to identify the difference. You can include when it was paid. So for example, if your covered period is April 20th through June 14th, and we're using this 8-week covered period as the example, your rent for the month of June or the month of July is due June 1st. You can include the full amount since it was paid during the covered period, although you technically didn't incur it because your covered period ended June 14th. But you also can include it if it was incurred during the covered period. So your water bill is due, or your water bill is from May 14th to June 14th, but you're not billed into July. You can pay that full amount because it was actually incurred during the full period, or during the covered period. So in the cases of incurred versus paid, for non-payroll costs, there isn't very much difference. So you do have some flexibility for those non-payroll expenses in regards to what is covered and what is not. Next slide. So this is what Schedule A looks like. And again, the easy form has no Schedule A. This is really for the long form. And the reason is because it's breaking down a lot of the compensation considerations, not just for the person, the self-employed person themselves, but they're doing this also for all the staff. And so this is the calculator, the Schedule A that you would use. And in addition to Schedule A, there is a Schedule A worksheet. So you have to use a Schedule A worksheet to complete Schedule A. You do not turn in the worksheet, though, to the lender, but you do have to turn in Schedule A to the lender. So the lender does not need to see your worksheets. They do not need to see how you actually calculated what you were filling out Schedule A with, but you do need to make sure that you do turn in Schedule A as a part of your forgiveness application. I do want to take a moment to answer some of the questions, and these will not be in any order. Are car leases eligible? We are a security company which leases 16 cars. So leases have been identified under eligible non-payroll expenses, especially when they are directly related to your business. So at this point, guidance would say that yes, they are eligible. Can you use a loan to pay scavenger services and payroll processing fees? So the scavenger services for utilities, depending upon what your business is, yes. The payroll processing fees, I need to check on guidance for. There's been some conversation around what is allowable and what is not. So I will get back to that part of the question. We are a service organization that is driven by payroll. We were fortunate enough to obtain a PPP loan during the first round, which means our loan calculation is based upon 8 weeks. Now we have 24 weeks. However, there are no more funds available, which means we're unable to rehire employees. So again, this is why when I'm saying identify a game plan outside of PPP, because PPP is not going to be your end all be all. And to be honest, because there is still over $1 billion that's been allocated, or I should say $100 billion that's been allocated to PPP that has not been utilized yet. There is conversation, and I don't know where things are around allowing people who did get PPP to get more money. So because a lot of businesses are experiencing what the same organization has had, and there is still funds available, that's why the conversations are being currently had. Can there be another round of money provided to people who have already qualified for PPP, especially the ones that were in the earlier phase? So there is a possibility that that may happen. But as a business owner, you do also need to identify other resources that can supplement what that would be in the event PPP does not happen. And so you do have EIDL. EIDL can be utilized for payroll as well as other expenses in the event that PPP may take a while or it doesn't happen. But I do think there will be another round of PPP, just given the amount of money and funds that are still left available. What can I use the EIDL for once approved? So EIDL is much more flexible than PPP. EIDL is almost any expense tied to your business. But you cannot do though. So you can't use EIDL and PPP for the exact same period of time, for the exact same period of expenses. So meaning if you had a $100 cable bill for June, and you said, I use my PPP to pay my cable bill for June, you can't say you used your EIDL to pay the same cable bill for June. Hypothetically, if you paid $50 with PPP and you paid $50 with EIDL for June, that is allowable because you did not double dip in the sense of saying, I paid $100 and I paid $100. You split it in half. So there's a lot more that you can do with EIDL than you can do with PPP because, again, PPP is really focused upon your W-2 employees, keeping them hired. The SBA has an easy form. What if I added an employee and a paid weekly versus every 2 weeks? An employee and paid weekly versus every 2 weeks. Can I use that form? If you've increased your employees, can you use the easy form? I don't think so. I will double check the guidance, but I do not think you'd be eligible to use the easy form because you're adding staff and so your numbers are changing for your FTE equivalent. And the reason the easy form even exists is because you're not necessarily calculating the additional FTE reductions or modifications. So I will get back to that question. I don't think you can, but I will confirm. If you paid some employees more than $100,000 during calendar year, you are not eligible to use the ED form. That is correct. Is there a time period when you need to file for forgiveness for 8 weeks and 24 weeks? Yes. And so the suggestion is that you are getting it in by the end of the year. And I would also say to not do the forgiveness application right away unless you are pushing against some of your windows. But there is going to be some additional guidance that comes out. So you may want to wait a little bit before you do the loan forgiveness application to see if there are going to be some additional favorable terms that come out after that happens. So there are some additional questions that are still rolling in. I am going to get back to the presentation, and then I will come back to the Q&A. Again, someone says on the easy form, it says no FTE adjustment. Why not? Because the easy form is really for those who are self-employed and who have had no changes. So the reason there is no FTE adjustment is because you are certifying that you've had no FTE adjustment. So they're not going to calculate what that FTE adjustment is as it pertains to your loan forgiveness, because in order for you to use that form, you are already saying up front, I haven't made any deductions, I haven't made any reductions, I haven't changed salary, I haven't changed staff, I am the only person that's employed. So it's one of those scenarios that you are certifying to, so there is no FT. That's why you don't use that form. So if you do have adjustments that are needed to be made on the basis of either salary or the numbers of employees that you have, then the easy form is not for you, and you will need to actually calculate the Schedule A or use the Schedule A worksheet and do the Schedule A. So we have the Schedule A form here, so you can take a look. You are listing your employees for the covered period or alternative payroll period, and so you are calculating what you have paid them, what are their average hours, and you do need to maintain this record for 6 years. You do not submit this to the lender, as I said, and this particular form does not include the owners or partners. It is for your staff besides yourself. So originally, if you were self-employed and you filed and under the prior guidelines for forgiveness, you would not have had to do the Schedule A. It was only for organizations that identified that they had employees. Now what they've done is done an easy form versus a long form, which is only 2 more pages. So as I mentioned before, there are the FTE safe harbor considerations. So as I outlined what those 5 steps were previously in trying to bring back your staff levels, you will not be penalized if you follow those procedures and you cannot get your staff levels back up to what they were for prior to COVID. But you do have to follow a process to show that you did do your due diligence and had a good faith effort in trying to make that happen. So there were a couple of safe harbors here. One is for safe harbor of wages, and the other is safe harbor for the actual employee count. And so you'll follow what these were to calculate what that potentially may be, and you'll find out if your loan will be forgiven by either 100% or it will start to decrease based upon how you're modifying those FTE and wage numbers. So as you are considering what your FTE calculations are, and again, this is on the basis of you having employees aside from yourself, there are 2 ways that you can calculate this. So one, you can easily just say, if someone works 40 hours or more, they're the equivalent of 1 FTE. Anyone who works less than 40 hours can be a half. That is the easiest, but that may not yield you the best number in regards to what you need to calculate for that FTE number. The other option is you're actually dividing by their average numbers of hours. So you would need to have the documentation and identify what the staff's average number of hours are per week. You divide that by 40 and round to the nearest 10th. So if you have a 32-hour employee, they would be the equivalent of a 0.8 FTE. Now, the one caveat here is no employee can count more than 1 FTE. So we know that a lot of times, some people may be doing more than 40 hours a week. They still would only count as 1 FTE. You can't count them for more than 40 hours. And so again, it's strongly suggested that you run both of these scenarios to figure out which option is best for you. And so again, you should do this looking at your pre-COVID period and your covered period using the same method and test both methods to see which works best for your business. So what they're looking at is what's your FTE count before COVID, what's your FTE count after COVID, and you want to see which one is going to give you the number that is yielding the best result for your business. And so what you really want to do is figure out the pre-COVID period that has the lowest number of full-time equivalents, because that means that's the lowest number that you then are being compared to post-COVID. So you don't want the high number, you don't want the high period, you want the pre-COVID period that will yield you the lowest number of FTEs. So in calculating what these FTEs are for the pre-COVID period option, I do want to highlight it is based upon your current full-time employees, or the employees that you had actually, not the employees that you used on the PPP application, because for some people that number is different. And so there were two periods that were suggested you can look at if your business is not a seasonal business. Those periods were initially February 15th, 2019 to June 30th, 2019, or you can use the period January 1st, 2020 to February 29th, 2020. And then seasonal businesses have the option to use consecutive 12-week periods from May 1st, 2019 to September 15th, 2019. Now, what I will say about this is I am keeping an eye on some of these windows of calculation, because they have been under some discussion consistently within the SBA as far as both the pre-COVID periods as well as the coverage periods of eligibility. So these are things that may potentially change. And this is, again, why you want to wait a little bit before you do this application, because some of this advice might not stick in a couple weeks or in a month. The last time I did a PPP loan forgiveness webinar, they literally released updates hours after I finished the presentation. So there was some of the information that we had given out that morning that was literally no longer in play by the time the afternoon hit. So again, I do want you to just be abreast that some of this may change, but just be aware that this is the process. So seasonal businesses do have a little more flexibility depending upon what your seasonality is. And so as contractors, you may fall into this seasonal business consideration. So just know that you do have a little more flexibility in identifying what your pre-COVID period is, and identifying what makes the most sense for you to be counting and identifying and looking at what yields you the lowest number of FTEs. So, I do want to have a really quick call to action. So again, because this is a federal law, there is the opportunity to respond. Next slide. Today is June 30th. The deadline for responses for commenting on PPP and what a number of the things that we've just discussed is actually tomorrow. You do have the ability to submit the comments through this portal. And when you do, someone said, will you get a copy of the slides? I'm sure you will. Hopefully it's a PDF, so these things are now clickable. But you go to regulations.gov, identify the SBA number, and if you have any comments in regards to how PPP legislation is and what some of these changes are, please do let the government know. Within the last week, I've been on a couple calls with some of the policymakers, the Senate Small Business Committee, and they are pushing for some additional changes. And so especially in being a Black-owned business or minority-owned contractor, you need to have your voice heard, because in some cases, the considerations around how these things are being created are not necessarily best suited for your business. Next slide, Matt. So I did want to take some really quick time to give some examples of what your commentary could potentially be. And I have identified this commentary, and my business will be submitting our comments as well, because these have been some of the things that we've identified to be challenging within the PPP program. And so extending the issuance date beyond the current June 30th deadline, inclusion of subcontractors, because as I identified, PPP is only for W-2s. If your business has already received EIDL and they're in an LMI area, making it where you don't have to reduce that advance from your forgiveness amount. And so there are some other changes in here, and I'm not going to go through them because we still have a number of questions. But if you do want some examples on what your potential response could be, there are a couple of other slides that have some bullet points to help you craft your potential response. So again, please do take the time to let your voice be heard. Feel free to reach out if you have no idea what you should say, but aside, now is kind of the time of Black people and minority businesses being put under a spotlight. I tell everyone, if you could not get things done before, now is the time to try to get them done. So don't work in the mindset of, oh, well, it's never been done before. There have been some pretty tremendous things that have happened more recently, just due to a lot of the pushing, the protest, the identification of these particular issues. So as a business owner, you should have your voice heard. So please do take a few minutes, copy and paste. If you have your own thoughts, but definitely put a comment about how you think PPP should be modified to better suit your business. So we are now officially at the Q&A, and so I will go back to see what questions remain. Does the PPP cover the employer's tax contribution? No. So you can't, the government's not going to give you money to cover that particular portion of the tax contribution. So not your employer tax contribution to any of the payroll taxes, state taxes. You cannot do that. What is the new rule for definition of an FTE? Is it 32 or 40 hours? I have not heard a modification to the definition of FTE. If that is something that you have been made aware of, please do let me know. But in reading through the SBA's guidance to date, there has not been a modification of FTE. It is still, to my knowledge, 40 hours. How will the definition of FTE affect your loan forgiveness amount? That was covered in a few slides back. So in identifying what your FTE count is, you want to have whatever the lowest number is. So be it whether they're counting 32 hours, whether they're counting 40 hours, when you're doing your total calculations for your full-time equivalents for your pre-COVID period, you want to have the lowest number. So during your COVID period, when they say you're keeping those numbers the same, or you haven't had anything more than a 25% reduction in your FTEs, you want to have that number be as low as possible. So whatever the definition ends up being, be it 32 or 40 hours, you want to have the lowest FTE pre-COVID number, so that when you're running the numbers for the COVID covered period, that is the threshold, the minimum threshold that you have to meet. Is your PPP forgiveness deduction affected by your EIDL loan grant amount? Yes. So within your PPP forgiveness application, there is the line to identify what you received as the EIDL advance. The same thing when you did your PPP application, they asked you if you received an EIDL loan to include that. And so you also want to make sure that you have included it. If you have recently applied for EIDL, haven't been awarded, you will definitely need to reach out to your lender if you did get the PPP to consolidate that loan amount, because the interest rate for EIDL is 2.75 for nonprofits and 3.25 for for-profits. PPP's interest rate is 1%. And so you do want to make sure you are eligible to get that 1%. And then as far as the forgiveness deduction, yes, any advance amount needs to be deducted from your forgiveness amount, because they won't allow that. They won't allow that in your forgivable consideration. For table 2, is the 100K annually or is it during the covered period? It's during the covered, annually. So they want to know, and this is just kind of standard. For the most part, they're disallowing consideration of salaries over 100K, and it's typically on an annual basis, not the covered basis. For payroll, is the payroll cost the gross before taxes? Yes, payroll cost is gross. 1099s are not, okay, so let me clarify this, because this has consistently been an issue I've seen in consulting people for both EIDL and PPP. Employees are W-2s. 1099s are not employees. 1099 is an independent contractor status. You cannot have an employee that is a 1099. That is completely counter. That's opposite. It's like saying, I got black, that's white. It's not the same thing. So when you say, I have a 1099, they can never be an employee because they are a 1099. It means they are responsible for their own taxes. They have a level of autonomy that does not exist as it pertains to how you do your business and how they do their business. And so what ends up happening is small businesses, to avoid the tax liability of an employee, will often misclassify an employee as an independent contractor. When it came down to PPP, that became very problematic for a lot of small businesses, because you don't have people on official payroll, you're paying them as independent contractors. They cannot be included. And they actually have the ability to apply. Well, they could have, if they met the deadline a couple days ago, they would have had the ability to apply for their own PPP. So when you are saying who is included in this FTE, somebody you issue a W-2 to. If you have not issued a W-2, when these people onboard to your organization, if you haven't given them a W-4, they cannot be included in your account for your Paycheck Protection Program. And when you fill out the EIDL loan and they say, how many employees do you have? They're asking about employees, not 1099. So if you have included a 1099 in that count, either for your EIDL loan or in the calculations for your PPP, you need to modify that, because you may have unintentionally committed fraud. Because what you said is, I have 10 employees, when in reality, you may only have 2 employees and 8 1099s. You can't count. They do not commingle. They do not cross over. They are not the same. No. So I really, really, really want to harp on that point. W-2s and 1099s are not the same. If someone says, how many employees do you have? They are asking about your W-2s. Now, there are some other programs that will allow you to count your contractors, but for the most part, they will identify that. They will say, okay, yes, we're allowing that. But from a standpoint of really strict IRS identification, a 1099 and an employee, or a 1099 and a W-2 are not the same thing. In regards to the $15,000 capped amount for the 8-week covered period, does this include payroll taxes paid? I'm a sole owner and employee and received $20,000 and used it for payroll, but a portion went to taxes. Let me come back to that question. I do not think that it includes the payroll taxes, but I will double check to be sure for that response. And for anyone who has submitted a question that doesn't get answered during the time, because I see we're at 1:59, Matt, can we email the responses?
Yes, we can. We can email the responses. And actually, what I want to let everybody know is that if they have additional questions even beyond this, feel free to send an email to me with your questions, and we will respond to them, forward them on to Christyn. As far as copies of the slides, if you're looking for copies of the slides, we will make those available, along with the fact that a full copy of this presentation will be available on our website within the next next 2 to 3 days. I will send out an email link to everyone, letting them know that they can see the recording of it. Again, any questions you have, please feel free to email them to us, and we can go from there. I just want to, again, Christyn will take care of answering questions later on. In fact, one I had in there that she has to answer for me as well later on, so we'll get to those. But again, it is 2 o'clock, and we want to make sure we're mindful of everybody's time. Thank you for joining us. Again, We will have a recording of this on our website in the next day or two, so please check with that. I'll send out a link to everybody for it. And Christyn, great presentation as usual. We are great that we're really excited about you being part of our team. And on behalf of the Tollway Technical Assistance Program as administered by Inner City Underwriting Agency, again, thank you for joining. And this concludes our program for the day. Thank you.
Matt, really quickly, I'm sorry, there is one thing I really want to say before everyone goes. The maturity date is different depending on when you received your loan. I did not touch on that on the presentation, but I do know people have questions about that. If you did get your PPP loan before June 5th, your maturity date does not change. So you have a 2-year maturity date unless your lender decides to allow you to have that 5-year maturity date. For anyone that's gotten the loan after June 5th, it's the automatic 5 years. So for those that were issued your loan prior to June 5th, please do reach out directly to your lender sooner than later to start to discuss if you can get the longer maturity date. Even if you don't need it, there is no prepayment penalty, so it won't hurt to start that conversation now. But it is something that you have to have your lender actually sign off on in the event that you got your loan before June 5th.
Okay.
That's all I wanted to add.
Again, thank you. And if you do have questions and you probably received an email invite from me, hit a reply on that and include your questions on that particular email, so I'll know that there's a question to Christyn that we will forward on to her and get your questions answered. Again, thank you for joining our broadcast. This concludes it for the day.